Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, like you see here with our 21 SPY and ES mean reversion systems, and of course our newer KISS trend systems, and I'm soon going to be launching a high-powered versions of those, and I'll do a video on that once I get that launched. Anyway, let's get started. This is a video recording Monday, November 13th, 2023. This is our back-end recorder for our website newsletter. I'm going to go ahead and get that started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, November 13th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. By the way, as far as trade ideas, I added some trade ideas, some longs, and I added a couple shorts. Okay, SDS, the double inverse ETF for the S&Ps at a demand zone, so definitely something to watch, at least for a hedge. Otherwise, as far as the markets today, mostly a consolidation, little bifurcation with the indexes. What I mean by that is the Dow and Russell were slightly up, while the S&P and Nasdaq were slightly down. Again, pretty small ranges for the indexes. S&P was only down 4 points, for example. All right. Otherwise, good day for commodities overall. Even precious metals were up, but the gold stocks were down, and that's really what's important. That area is, just remains pretty horrid. Remember, guys, CPI, PPI on Tuesday and Wednesday, respectively. I got a little typo here. It should be Wednesday. Those obviously could be market move-in events. Also, like we discussed, this is just one crazy market. Last week, for example, we had more new 52-week lows on Friday than highs. And the market, the S&P was up over 60 points. This is the problem. We have 7 stocks that have led this market. 2 stocks in the S&P 500, Apple and Microsoft, make up almost 15% of it. Some of these sectors, like XLK and XLY, you have 2 stocks that make up roughly 50% of those. Long term, guys, that is not sustainable unless we start seeing some more broader participation. Let's move on. Image number 2 here. So this is taken by Charlie Bilio, if I'm saying that right. Good example he shows here. Apple and Microsoft currently are 14.7% of the S&P. And you can see in the past, some of the big ones, Microsoft and GE back in the late 90s, ExxonMobil, Walmart back, in the 2008s, IBM, early 1980s. But what we have right now dwarfs anything we've ever seen, okay? And again, these are 2 stocks here, but, you can throw in essentially 7 stocks that have basically led this market. Next. Item number 3 shows the index sector table, what transpired today. Like I said, basically a bifurcation, small range day for the indexes. We're, basically consolidating last week's massive gains. As far as the major market sectors, kind of a 50-50 up and down. I'd say a few more were down than are up. Remember, there's 21 sectors we follow. Utilities were down the most, but most of the moves here are less than 1%, as you can see. Currency-wise, US dollar down just a tad, 0.13%. Crypto finally pulling back a little bit. One thing I've been talking about crypto or Bitcoin is that the moving average ribbon is really stretched. It needs some reversion to mean pullback. Commodities, almost all to the upside here, especially natural gas up 5.4%, except for coffee, but otherwise everything else up nicely. As far as precious metals, gold and silver up about 0.5%. But again, what stands out to me is the miners, the stocks. They tend to lead, and they continue to lead down. Bonds down today, and 10-year, 30-year just slightly up. Next. Item number 4 shows the economic news calendar. Like I said, CPI tomorrow, PPI on Wednesday. Let's go ahead and move to the charts. First chart below, item number 5 is the weekly snapshot of the 5 key major index or the Bollinger Bands. Like I said, huge rally the previous week, and then a little bit last week. Consolidation. Anyway, you can see the patterns here. We broke out of some of these channels. We held the support on IWM, etc. Next, image number 6. Here's the daily view of the same chart. Again, as you know, 2 weeks ago, price was buried below the lower Bollinger Bands. We had extreme bearish sentiment, positive divergence on some McClellan oscillators. Everything was stretched, and we've had a good rally. The previous week, we simply had a breath thrust on that move up. We were up 5 days in a row, which is insane, with 4 open gaps. You can see the indexes, just a 1-day pullback last week on Thursday, but we're still, they all held the 9 EMA on the indexes, bounced slightly higher here. Next, moving to the S&P 500 charts, our proxy. So here's the daily S&P. Again, we talked about this 5-wave decline. It's not a traditional 5 waves, guys. If you know your Elliott wave, the high of wave 4 cannot overlap the low of wave 1 for a standard 5-wave impulse. But when you have an overlap, the other option is a leading diagonal. So WX, YZ. Okay. Anyway, so we rallied up. We took out the downtrend line. There was an open gap here from September. We're slightly above that. All right. Again, one option, guys, and you still cannot overrule it, is that this leading diagonal will lead to a lower high. This could be a wave 1 down, a wave 2 up. Wave 2s can retrace a lot. Right now, if you add fibs here from the 4607 high to the 4100 low, we're right around the 61.8 fib right here. But leading diagonals can retrace 76, 78, 85%. So you can retrace a lot, enough that it would convince everyone we're going to go back to the highs. Again, the bulls have the football, don't get me wrong, but you just have to keep things in mind. We've had a heck of a run here. I do think at minimum we're going to be due some for consolidation soon. Next, image number 8. Here's another daily view of the S&P, just zoomed out a bit. Again, we're basically right at the top of this channel, essentially. There's another area up here, up around 4450. Next, chart 9. Here's the daily KISS system. Again, no changes. Remember, this went long a couple weeks ago. Basically, 2 days off the lows. Pretty damn good entry. And we do have a smart trailing stop. The original stop was placed at the low there, essentially 4100. So the stop moved up, 140 points to 4238. Next, image number 10. Here's the 4 time frame. So again, you could see at the lows there a couple weeks ago. Look at the daily chart. We had a DeMark 9. We had support cycle. Very wide moving average ribbon. Everything was set for a rally. We got that. And what we see right now, again, we're a little overbought here, guys. We have some A's here. That's amateur buying. What that means is that's small, it's trying to detect smaller traders buying, 200 or 300 shares after a big rally. They tend to chase late. So you have A's here. Sometimes they're a little bit early. You have some A's over here on the half-day chart. You have a DeMark 9 on the 78-minute chart. You have an A on the 130-minute. Now, the ATR is supported on all these lower time frames, right? But short term, we have some things here to be aware of where you don't want to be chasing longs on the indexes. Next, chart 11. Here's a half-day chart, 195-minute. Again, you can see the downtrend line here. We're basically right at it. Remember, we filled that open gap from September. Here's the fibs on this one. Again, we're right at the 61.8. That's always an important area as well. Like I said, where I would have looked for some sort of pullback. And let's see if I got this up. So I'm going to go ahead and draw this in here. So one option that we could favor perhaps would be, remember, there's all these open gaps. Pull back to fill one of these gaps, then another rally. Again, this is very possible, guys. You get pretty good up here, then you form a pretty good top. We'll see. But short term, I'm looking for some sort of high here, maybe start of a pullback for a higher low. Next, image number 12, 60-minute view. Again, this shows you some of those gaps. Again, this broken down trend line of this pattern would now be a great support area. And again, that's, what is that roughly? A couple hundred points if it were to come all the way down to there, or at least fill this gap. Next, Trevor, 13, 60-minute view. Again, shows you these gaps below. On a pullback to fill a couple of these gaps, I would be targeting at least this one, maybe even this one, but at least this first one here. We do have some MACD divergence here now. Your last higher low is this 43.44 area. Trevor 14, another 60-minute chart. This shows you how this is a big area. Here's the gap, which we filled. This now is also a potential support. But again, your higher low here is that 43.94. Next, Trevor 15, here's SDS. That's the ultra short ETF for the S&P. It's 2 times leveraged. Again, you're down in here at the top of a demand zone. You can see the demand zone here. And you've got a very strong MACD divergence, some RSI divergence. So this looks interesting here for at least a hedge. Next, Trevor 16, here's a 30-minute view. And let's go ahead and move on. Trevor 17, here's the triple Qs. Again, the triple Qs, as you know, took out this downtrend line. Strong move. We're now into a supply zone up here. A pullback. This broken downtrend line would now be support. This is the largest rally in the downtrend from the July high, so it does favor a higher low on the next pullback. Trevor 18, here's the weekly view. Next, Trevor 19, here's the KISS system. Again, this went long, as you know, basically about 3 bars off the lows. Pretty damn good entry. And the triple Q's KISS system has got at least this is one of the custom ones, guys. It's got a smart trailing stop now at 351.20. So there's been 3 new smart trailing stops. Again, still pretty wide, obviously, but it's at least moving that stop up now. Trevor 20, here's the 4 time frames. Again, very similar to the S&P. You could see on the daily here, you have a DeMark 9. Remember, you had a DeMark 9 at the low, which called that low. So now we have a DeMark 9 at the high. Again, the ATR, that's potential support on all these time frames. Next, Trevor 21, here's the half-day chart. Again, you could, same as the daily, we busted through that trend line. We're up here now near this resistance from early September. This broken down trend line is now support. We do have some RSI divergence here. Let's see, so far a lower high with a higher high in the S&P. Trevor 22, here's the 60-minute view. Again, you can see the pretty good MACD divergence now. So definitely, again, divergence is not a sell signal, guys, but it is something to get your attention because it could lead to it. So definitely be aware of that. Trevor 23, here's IWM small caps. So if the market were to have a decent end of year rally, this area would interest me because I think it has the most to catch up to some of the other indexes. What you have here, well, first off, this rally off the lows, this is the largest rally in the downtrend that began from the July highs. So that favors a higher low. You have a potential little inverse head and shoulders. So the Russell interests me here for a long on the indexes. If I had to go long one of the indexes now, if I wasn't long. Trevor 24, there's the weekly view. Again, we held that long-term support. So far, we got a little higher low in place. The Russell is a great example of the horrid breadth and the average stock underneath the surface. Again, if you take away those 7 to 10 stocks like Apple, Microsoft, Nvidia, etc., stocks under the surface haven't done very well. So the Russell doesn't have those stocks to skew, the weighting. It doesn't have that like the S&P and Nasdaq, and so it's more representative of the weak stock market underneath the surface. Trevor 25, here's the 60-minute view. Again, pulled back to this gap area. It hasn't filled it. Again, if you wanted to look for a long, you could possibly go long here with a stop at the 166, 70 area. But you do have a gap here. It may be better to put the stop somewhere below the gap. And that does it for the indexes, guys. And we'll see what happens tomorrow. Futures tonight currently are pretty flat. Nothing going on. Let's move on. Chart 26, here's the VIX. Again, VIX, as you know, had that meltdown during that market rally. Now what you have here is a pretty good divergence here. I don't have it marked in the chart. I can draw it here. You can see it right here, the divergence. And here's another thing, guys, and hopefully you can visualize this with the video. Notice how the Bollinger Bands are going straight down, right? So if the VIX were to melt down, to me it would be impossible to tag the lower Bollinger Bands, right? So what you need is actually a bounce in the VIX to cause this lower Bollinger Bands to start curling up, if you can visualize that. Then you get a pullback, and then the VIX would be set up to test its lower Bollinger Bands. So I think, based on the way the VIX looks, I think the market may be set to have a bounce here anytime. So let me state that again. I had a distraction here. So I think the VIX is set up to bounce here in the short term. That'll cause that little pullback in the market I'm looking for. Next. Chart 27, here's the 60-minute view. You have a really good MACD divergence that's been setting up here. Little base starting to form. Next. Let's talk about the negative breadth, guys. So there's a chart of the Nasdaq with the new highs and new lows, and the new highs minus the new lows. So look at that rally the previous week. This was the new highs minus new lows was declining. So that is really should have your attention. Definitely, again, it's because of those 7 stocks that are skewing everything. Next. Chart 29, here's the Nasdaq highs minus lows, same deal. This is what gave us a warning for a bear market back in late 2021. And, even this year, during that very strong rally from March to July, this thing was declining, and it continues to decline. Again, we need to see this reverse, guys, eventually. It's not healthy for the market. Let's move on to some of the sectors. Chart 30, XLK. I'm just going to show a few sectors. Again, XLK essentially back to the highs. But again, guys, here's the problem with XLK. 2 stocks, Apple, Microsoft, make up 48% of it. So why even show this ETF? Just show those 2 stocks. Chart 31, XLC, communications sector. 2 stocks also make up almost 50% of this. I think Amazon and I can't remember the other one, but 2 stocks. So to me, it's a worthless ETF. Next, chart 32, biotech, XBI. Now, here's a potential trade setup. So this rally was the largest rally since the downtrend began in June. So that favors a higher low. You got a couple dojis here. You could go long 1 penny over this doji, put a stop right there at today's lows. Next, chart 33, LABU. That's the triple ETF, long. Same deal. You could go long this over this candle high with a stop right at that low. Pretty good risk reward. Next, chart 34, XLF Financials. Again, bumping up right around the 61.8 fib, an area where it may find some weakness. Chart 35, banks. Again, as you know, the previous week, a couple weeks ago, they broke this downtrend line. So far, just pulling back a little bit. Looks okay. Chart 36, IYT. Right now, you got a tight coil here to monitor. It could pop either way out of here pretty nicely. And finally, chart 37, XLE Energy, bouncing. Favored a little bounce last week off this doji. Little bounce back today, just a slight close back above its 200-day moving average. The thing about energy stocks, guys, is they actually make money. So I do like this sector overall just from that perspective. Next. Moving on to commodities, chart 38, DBC. Nice rally today. Again, you can see how important this 200-day moving average has been lately. Found support there in August. Basically October, a little Pinocchio move below, but that's fine. And here recently. I'm not sure what pattern's setting up here. You can almost see a head and shoulder or maybe a diamond or who knows, but definitely fleshing out some sort of pattern. Chart 39, crude oil, nice bounce the last couple of days, back to its 9 EMA. Again, this could be a wave 4 bounce perhaps like we show here, then another decline. Though the moving average ribbon is very wide still, even with the bounce the last couple of days. Excuse me. And so this still may need to be worked off a bit. Chart 40, natural gas. So this is just the weekly chart, best way to show it. It's been in this basic uptrend since August. So up 5.4% today. Chart 41, copper, nice rebound. Again, this is a big important support, this 355 area. And we've been holding that so far. Next. Chart 42, DBA, nice rally, kind of has a flag look to it off this 20-day moving average. And finally, chart 43, there's the weekly chart. Again, it's in a long-term uptrend. All right, moving on. Chart 44, here's the 10-year treasury yield, was up today off those highs. There's an open gap here. That still may be filled, but I favor a lower high here ultimately in rates. You can almost see a little head and shoulder pattern that could form if this were to move a bit higher. Next. Chart 45, TLT, again, inverse look. It ended its parabolic downtrend. Next. Chart 46, high yield corporate. Again, this tested its recent highs. Remember, the market tends to follow high yield corporate. So far, little pullback from those highs, logical, still holding the 9 EMA. Chart 47, Bitcoin. Nice little pullback here. Again, remember I've been talking about this moving average ribbon. It's really wide, so I think that needs to be worked off a bit. Back when it was really tight here in early October, that was a good time to buy down here at support. But this ribbon to me needs to be worked off. Chart 48, there's the weekly view. Bitcoin had basically made it to its 38% fib. So that was one of the targets after this fifth wave low back in 2022. Chart 49, MSTR. This was the long idea I threw out a couple weeks ago for Bitcoin out of this coil pattern, and it's had a heck of a move. If you bought it around 430 on that trigger point, heck of a percentage move. The dotted lines here show you each successive high or low. So that gives you an example. Let's say you bought this coil. Your immediate stop could have went below the coil trend line. Then once you started rallying up, then move the stop up to this next higher low, then these higher lows, then this more recent higher low. And you could just stay in the trend until you get stopped out. Next. Chart 50, US dollar, slightly down today, otherwise still in the same pattern that I drew, this kind of expanded coil-like pattern. Chart 51, gold, slight bounce here off the 50-day moving average. I do favor that gold put in an ABC low in October. So to me, I'm looking for a higher low ultimately. I'd like to see it hold this broken trend line. Notice your moving average ribbon is pinching on a bullish configuration. Chart 52, silver, otherwise still stuck in this big coil-like pattern. Though you have a doji today, which has my attention. We were to take out the high of that. Chart 53, there's the weekly version. It just shows you that coil that's been forming. Next, chart 54, GDX. So GDX, again, the problem with this area has been the stocks have been underperforming, and they underperformed today. I'm still watching to see if this can form a higher low on this. You can see this kind of, rough inverse head and shoulder pattern possibility. But again, this area needs to show us something, and it hasn't so far. Chart 55, here's the 2-hour view. Again, this has the ratio, which is heading down. We're below the 61.8 fib. There is a gap. Okay, we filled this gap. Again, guys, the onus is on the bulls for this area. Next. Chart 56, BPGDM. My hope for GDX forming a higher low is this. BPGDM did get in the oversold territory at the lows, rallied off of it. We had a MACD divergence, and a lot of times the divergence on this BPGDM tends to give you pretty good lows or highs. You can see some of the examples, the high back here, the low here, and we'll see. Onus is on the gold bugs for that stuff. Let's go ahead and move on to trade ideas. Follow up on some ones from the previous couple weeks. Here's AJG. One from mine 2 weeks ago was long trigger was 238. Nice percentage mover there. Make sure to lock in some gains. Move your stops up. Charter 58, Massey, one from last week. I liked the little bottom rectangle pattern. It's been moving steadily higher. Slight poke now to the pattern. Next, Charter 59, Honeywell. Steve mentioned this one on the weekend. One to monitor if it can take out that trend line. Charter 60, Boeing. This was one from Steve last on the weekend. You had to be in it, honestly. Big gap up today on good volume. Next, Charter 61, GDHG. Guys, great example. This was a long idea of mine a couple weeks ago out of this flag. Had a hell of a rally. Made it to 25. But this is why you got to have stops. If you got lazy and you were in it today, you were up again, and then you gave it all back. And in fact, it spiked down to 11. So you have a hell of a run like this from the 13s up to the 20s. Take some damn profits, move stops up. Don't let those gains evaporate like that. Trevor 62, AI. This is a coil of mine I showed a couple weeks ago, busted out. To me, it looks interesting here. This could be an area for it to launch again. If you wanted to buy some shares, you could put a stop right at that 25.60 area. Trevor 63, BLDR. Here's a new one, kind of a flag. This would be the target area up around 145 potentially. Remember, it's just a potential target. Doesn't mean it has to go there. Trevor 64, COUR, another new one. Nice volume patterns. Trigger over the 1906. Trevor 65, skin. Have some skin in the game. What stood out to me was just kind of a, maybe a bottom fishing play. You got a big pickup in volume today, way over average. Got a little MACD divergence, RSI divergence. So the trigger would be over today's highs, stop at the lows. Trevor 66, Janix. Nice bullish rectangle pattern. Volume pattern sticks out to me. So over today's highs, essentially, trigger. Trevor 67, Fix. Breakout idea, kind of a cup and handle look. Trevor 68, VSCO, another long idea if it can take out this 20 area. All right, guys, that'll do it. Let's see what happens tomorrow. Again, have a great evening. Thanks for all your support. And on the YouTube video, please like, comment, subscribe. Take care.